I think the market is underpricing the change in Washington. That's actually surprised me. I know that Bitcoin ripped from 70 to 100K, but I think the change is much greater than that. The reason for that is I think unless you worked in crypto over the last 4 years, you can't imagine how challenging it was. You sound crazy when you say that banks won't take your $10 million deposit. People are like, no way.
Did that happen to Bitwise?
It did happen to Bitwise. I think it's a great long-term buying opportunity. I think the challenge the market is facing right now is all the short-term news is negative and the long-term news is incredibly positive.
That's so true.
And so it's so easy to focus on the short term. So I don't know if it's one catalyst. It's just like the tide slowly coming in on Bitcoin, which I think is what's happening.
Hougan begins by stating that while Bitcoin adoption among institutions and corporations is accelerating, we are still in the early stages. Currently, only about 10 to 20% of financial advisors have allocated Bitcoin in client portfolios, meaning there is a vast untapped market still to enter the space. On the corporate side, restrictive accounting rules have historically discouraged companies from adding Bitcoin to their balance sheets. However, despite these obstacles, companies still managed to acquire hundreds of thousands of Bitcoin last year. This growing institutional and corporate demand already surpasses the total yearly Bitcoin mining supply, which Hougan sees as a highly bullish indicator.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I would say it's going well and we're still early.
Okay.
So whether you look at institutional adoption, pensions, endowments, family offices, financial advisors buying Bitcoin, or corporations putting Bitcoin on their balance sheet, we've seen early movers in both spaces. So on the institutional side, it's something like 10 or 20% of financial advisors now own some Bitcoin on behalf of clients, but there's still 80, 90% to go. On the corporate side, they've been held back by weird accounting rules that made it almost impossible for companies to buy Bitcoin, but they still bought hundreds of thousands of Bitcoin last year. Even at this early stage, though, both of those two markets, institutional adoption or corporate adoption, is buying more than all the Bitcoin mined every year, which makes me very optimistic on where we're going. But we're still maybe inning 1, maybe inning 2. That's about where we are. I think the market is underpricing the change in Washington. That's actually surprised me. I know that Bitcoin ripped from 70 to 100K, but I think the change is much greater than that. I look at what's happening, not just in Bitcoin, but in DeFi, even in alt layer ones. And I think the market is just underestimating the change. The reason for that is I think unless you worked in crypto over the last 4 years, you can't imagine how challenging it was, right? You can't understand how difficult being debanked regularly was in this ecosystem. You can't understand how difficult multiple subpoenas and lawsuits were. You sound crazy when you say that banks won't take your $10 million deposit. People are like, no way.
Did that happen to Bitwise?
It did happen to Bitwise. It happened to everyone in crypto, of course. We all faced banking challenges. When Bitwise was first formed, it was difficult to get people to accept our checks from VCs to start the business, which is an incredible fact. But unless you realize just how repressive it was, you can't imagine what it will be like now that that's lifted. You look at what's happened at the SEC recently, pulling back on the Coinbase lawsuit, pulling back on the Uniswap lawsuit. I think just the rebound for that is 2 to 3x more than we've seen in the market so far. So I guess I've been surprised that people haven't sort of felt and intuited that difference. But now I recognize it's because they didn't know how bad we had it. And so therefore, how open the market is now.
Yeah, so it's a good buying opportunity.
I think it's a great long-term buying opportunity. I saw a tweet yesterday from a Vichel from Electric Capital that said, opportunity is fundamentals minus perception. And the opportunity has never been greater in crypto if you use that math. I think it's going to be, there's a slow, steady drip. So unfortunately, that's not a one-off catalyst. But every time the Bitcoin 13F filings come out and they show that the scale of institutional adoption has gone from 14 to 18 to 29, it's going to 50 or 60. That's going to be another signpost that we're moving there. Every time you see another company say it's putting Bitcoin on its balance sheet, that's going to be another sort of pebble in the pond that lifts the tide. So there's going to be a lot of this sort of slow turn. I think if maybe there's, if we do see more sovereigns come out, I think maybe that could be the spark or catalyst, but I think it's more of a slow bull market. Actually, I wrote about this week in my CIO memo. I think the challenge the market is facing right now is all the short-term news is negative and the long-term news is incredibly positive.
That's so true.
And so it's so easy to focus on the short term. So I don't know if it's one catalyst. It's just like the tide slowly coming in on Bitcoin, which I think is what's happening. Yeah, I think you have to look at the market and say it's more volatile or open or uncertain than it has been in the past for exactly the reasons you called out. Macro prognosticators are all over the map on what they expect. Runaway inflation, runaway deflation, where are you? I think where Bitcoin fits is you need a hedge. You need a thing that opts out of that system and that is steady, producing blocks all the time. Maybe it's not 100% of your portfolio, but if it's zero, then you're 100% exposed to this mess. And maybe people should think about having a little bit that's not exposed to that mess. My favorite view of the value of Bitcoin on a long-term basis is to look at the size of the market it's going after. I think Bitcoin is well on its way to disrupting gold. That's a $20 trillion market. I think it's going to be used for international transaction and cross-border transactions. That's another many trillion-dollar market. And then you can divide that by the number of Bitcoin and you end up with a target amount. At Bitwise, we think it's going to cross $1 million by 2029. I think from a shorter-term perspective, you can just look at supply and demand in the market. Right? The big criticism of Bitcoin is the price is set by supply and demand. But that's also a real benefit when you're in a market like today, where again, we're producing 160,000 Bitcoin a year and ETFs are buying 500,000. Right? Something has to give. And I think what gives is price resistance and ultimately it goes higher.
One of the most overlooked aspects of institutional investing, according to Hougan, is that having zero exposure to crypto is essentially a short position. Crypto is now a $3 trillion asset class, and institutions are realizing that even a 1 to 2% allocation is necessary to maintain a neutral stance. This realization is driving institutions to gradually increase their Bitcoin allocations, and Hougan predicts that this trend will accelerate significantly in the coming years.
Yeah, I mean, I will just say from our client perspective, we see a lot of people coming to Bitwise and trying to generate income on their Bitcoin. Large Bitcoin holders who, whether they want to stake in the emerging staking ecosystem, or they want lending, or they want to write derivatives contracts against that, they're asking us, how do I generate 3, 4, 5, 10% yield while still having exposure to Bitcoin? And so we work with them on those solutions. But I think it's what you're pointing to. I don't think people are going to want to part with their Bitcoin.
Right.
Yes, exactly. Also, I would note the people who have bought Bitcoin to this point have strong conviction. I don't think, they get played as weak. I don't think they're weak hands because you had to step out of the mainstream to do so. And you only step out of the mainstream if you're confident. And so I think we're going to have a lot of people who want to hold on to this. So you'll see a rise in lending markets. You'll see a rise in carry trade. You'll see a rise in staking on Bitcoin. I think all of that's going to happen.
Were you expecting the ETFs to be as successful as they were?
No. I was expecting the ETFs to be successful, but they were so much more. It's so crazy. Before the Bitcoin ETFs launched, the most successful ETF of all time gathered $5 billion in its first year. That was the ceiling. ETFs did 37, right? 37 is so much more. I was optimistic they might do 10, right? I thought it was going to be huge. We had worked on it for like 6 years. So of course we thought it would be huge, but $37 billion is crazy. All that said, I bet we do 50 this year. I think people, if they think it's like this bell curve and down we go, it's not. Every ETF almost in history that's been a success does more in year 2 than year 1, and more in year 3 than year 2, and more in year 4 than year 3. For the reasons we started talking about at the beginning, half of the market can't even buy this thing yet, right? And the other half is just learning. And the people who bought it in the first year are probably going to double down. Think about the first time you bought Bitcoin. Do you own more today than you owned then? or as your holdings, of course you own more. Like that's just the direction of travel. So I was blown away, but I think this year will be even bigger. I mean, the deep institutional investor market is a market with tier after tier after tier, because those people want their jobs. And if it goes wrong, they want someone to point at and say it was their fault. That said, we've been working with a number of consultants for a significant number of years, and many of them are already allocating. That's why you're starting to see this bubble up through the end. I'll add one more thought from an institutional perspective, because I think people overlook it. Crypto's a $3 trillion market right now. If you have a 0% allocation to crypto, you're effectively short.
Yeah.
Right? When we talk about people allocating 1 or 2% to Bitcoin, that's just to get to neutral. And I think institutions are starting to recognize that. Once you accept it as part of this pie, you need to have at least a little bit, or you're making an active bet against it. And they're not comfortable doing that either. So I think you're going to see this 1-2% thing really take off at the institutional level over the next few years. We don't think of BlackRock as competition, actually. I'm very glad BlackRock is in the market. They've helped substantially grow the market. They've made the pie much bigger. They've certainly gathered a huge amount of assets. We're really happy having gathered, $4 billion into BITB. We're happy that we're 20% cheaper than BlackRock. We're really serving a different market. So they're serving mostly a traditional market that doesn't know that much about crypto. We're serving crypto specialists and people who want to work with a specialist manager. Some of the other smaller players I consider more direct competition, but I love that BlackRock is in the market.
Well, interesting.
All that said, it's hard, right? This is an extremely competitive market that's benefited people. These ETFs are extraordinarily cheap. Our ETF is 20 basis points, 0.2% per year, which is half the fee of the largest gold ETF. I mean, we've raced to a rock bottom, incredible deal for investors. So it's a little bit painful for me, but I think it's great for all the people who are buying. Yeah, often actually it's just flat cheaper is the reality. So even if you'd have to be investing billions of dollars to get institutional custody, institutional audit, institutional tax, and institutional trading for a price of 0.2% per year. I mean, the beautiful thing about ETFs, the promise of ETFs, is every investor can invest on the same terms as the largest investors in the world. So one reason institutions buy the ETF is it's actually probably the best deal going. The second is you have, years and years of professional expertise. Right, at Bitwise, we've been managing crypto assets for 7 years. We've lived through hard forks. We have relationships with 9 liquidity providers, so we're sourcing Bitcoin at the lowest possible cost. And I think that's just a great package for these investors. It's the easy button, but it's also the most efficient way to allocate, and that's why you're seeing the huge growth.
Hougan does not see BlackRock's Bitcoin ETF as a competitor, but rather as a catalyst for market growth. BlackRock has helped expand the Bitcoin market, increasing awareness and accessibility. While Bitwise's ETF is cheaper and serves a more crypto-savvy audience, BlackRock's presence benefits the entire ecosystem. He also highlights how competitive the ETF market has become, with fees being driven lower to benefit investors. The Bitcoin ETF market has become one of the most cost-efficient investment vehicles, offering institutional-grade custody, trading, and security at an extremely low cost. Please like and subscribe.